everyone, good morning. You're watching Market Fatafat on ET now. I'm Mubina Kapasi. Market's a bit quiet, but as we speak, the losses that we saw have actually accelerated. So now the Nifty and the Sensex both are at the day's low. The Nifty firmly below 12,200. The Sensex now at 41,300. But we on Market Fatafat will flag off all those individual stocks that are, moving the markets today. For that, we have with us Varun and Vivek from our research team. And Vikas Jain, Senior Research Analyst with Reliance Securities as well, joins in. Vivek will be with us in just a bit. So morning, everyone. And let's kickstart the show with the Bharti Infratel. This is an important one because it's the second time that they've had to extend the long stop date for the Indus Towers deals. And this time around, it's been extended to the 24th of Feb. That's once again 2 months from now. Reasons being that, of course, they've not received the government approvals for the proposal. From the FinMin, it's stuck, the file stuck at the DOT as well. So now they've had to extend the long stop date to the 24th of Feb because the merger contingent upon the receipt of approvals. Remember, this is going to be an important one because it will sort of give an exit opportunity to the existing investors of Indus as well, like Bharti Airtel being one of them. So Infratel down 1%, Airtel as well as among the top Nifty losers today. But because, the auto stocks are a little more resilient today in trade, though mind you, they as well have sharply come off their opening highs. M&M, however, still 1.4% higher, continuing its slow up move. Anything that you would like to observe here?
Well, if you look at in the auto space, Mahindra has been a consistent underperformer. But the stock holds pretty promising from current levels because if you look at the stock has made a good double bottom into sub 510 levels. So on a higher side, the stock can easily move inch upwards to 565 to 575. So we continue and maintain a positive bias over the next few weeks.
All right, so that's M&M, and Vikas believes that there perhaps will be more room for an up move from here on. Okay, and Varun, Reliance Industries, share swap on our radar.
Right, Mabina. So the latest that's come out in a paper article is that they're looking for a way to incorporate Reliance Retail into RIL via a share swap. So essentially what they're looking at is 4 shares of Reliance Retail will get you 1 share of Reliance Industries. So on the private market, these shares are already trading at around 475 to 500 rupees per share. So if you take that into account, then the valuation of Reliance Retail is 2.5 lakh crores. Now, if you look at the EBITDA of Reliance Retail, it's around 6,000 crores. So you're looking at 40 times EV EBITDA to get it to 2.5 lakh crores. And I haven't really looked at the debt figure. 14,000 crores is what the management has infused into Reliance Retail after acquiring it. So they've spent a fair bit of money there. But that being said, ITC, is around 2.8 lakh crore market cap, and the EBITDA is 20,000 crores. So, and it's also growing at like 10 to 15%. So unless you're looking at growth here that's, looking at 25-30% kind of growth, it looks very expensive on the face of it. But that being said, it's a Reliance Group stock, and I can't really remember the last time that a Reliance IPO or anything Reliance related was undersubscribed. So, even if you look at this very expensive valuation, which is twice of DMart's and almost that of ITC's, it will go through at that price. But we have no definitive details yet. This is just the first communication we've heard about through our sources and the newspaper, of course.
Okay, 1540 for RIL, 0.4% gone. All right, moving on, let's also talk about an IB housing. Vivek, what are you observing here?
Well, just have a look at this particular stock. It's very important to note that this particular stock, it's been under so much news flow, so much negativity has abounded this particular name. However, given the fact that, the MCA findings actually revealed that there wasn't too much wrong in terms of the kind of, business activity that the company was conducting, was something that lent a little bit of credence to the stock. The stock did tank a little bit after the delay in the court verdict, but just have a look at how the stock has performed in the last 4 trading sessions, up for 3 out of the last 4 trading sessions, and the stock was up between 8 to 10% just in the last 3-4 trading days. So very interesting to note, and we should be watching around for any kind of fundraising activity that the company may resort to, and how it does boost the balance sheet in terms of how Indiabulls housing performs going forward.
Okay, another day of a rebound or gains coming in for IB housing. JSW Steel, and for that matter, I'd like to flag off all the metal stocks because it's yet another day where this sector is shining bright, and in particular the ferrous space. In fact, today's top Nifty gainers as well are from the steel space, like JSW, Tata Steel, SAIL, so on and so forth. Now, remember that we've been seeing this slow and steady rebound come by in steel prices. We've spoken earlier as well to companies like JSPL, and yes, they as well have acknowledged that their steel prices are going to go up. In fact, in Jan as well, steel prices are expected to go up by 1,000 rupees per ton. So in anticipation perhaps of that and of the fact that, PMIs slowly across the world are increasing, there is a bit of an uptick that we are seeing in steel companies. So today as well, JSW Steel is higher by 1.7%. And since we are talking about steel stocks, let's also get in a technical perspective. Vikas, from you on a Tata Steel, do you believe that there's more room for an up move here?
Yes, but more bit about the up move can come in. If you look at the broader term picture, the stock has been in continuous uptrend from the lower range of around 385 390 odd levels. On the higher side, if you look at on the weekly charts, 485 to 490 is a congestion zone in the 200-week average. We believe the risk-reward ratio does not go favorable at current levels, so it's better to put profit in the range of around 485 to 490.
Okay, that's a Tata Steel recommendation, 470 rupees for this one, so a nice recovery seen here. Varun, yes, bank, meantime, more downgrades pouring in here.
Right, Mobina. So the latest downgrade is coming in from Citi on Yes, where they're maintaining their sell stance and they have set a target of 46 rupees. So that's a fair 10-12% lower from 51. This target was previously at the current price, 50 rupees, so they've lowered the estimates further. They're looking at a profit decline of around -5 to -4% for FY20 and FY21. So that now needs to be priced into the valuation. That being said, we still haven't heard anything from Yes on that capital raise. So, a lot of brokers like Jefferies have a lower target even than this. So, all eyes on this one going forward. We'll update you once we hear anything on that.
Okay. Excuse me. That's Yes Bank for you. It's 1.2% gone at 50 rupees. And finally, Vivek, let's talk about BPCL. We had some disheartening news, I suppose, just day before yesterday.
Well, that's right, Mubina again, this particular name, a lot of analysts on the street had actually penciled in the stake sale of BPCL or the divestment of BPCL to actually come through in FY20 itself. However, day before yesterday, what we understand from government sources was that the divestment of BPCL is unlikely to conclude in this particular fiscal. It's most likely going to extend into the next fiscal. Now, more than anything else, this basically means that a lot of analysts as well as traders who had built-in positions into BPCL at this point of time would be forced to relook or reallocate their positions in this particular stock on the back of the fact that most likely going to push forward to the next financial year. Other important thing is the government able to garner enough and right valuation for this particular asset, and that is going to be extremely important. Also, street is still extremely unclear as to where the bids have actually come in at. So overall, a lot of uncertainty regarding BPCL as well. After the steep fall the stock took day for yesterday, today the stock is slightly flat. Saw a bit of buying in the morning, but that has cooled off as well.
Yeah, in fact, now it's absolutely flat. So whatever gains were seen in the earlier parts have been sold into. Let's look at the RWY small case and see what that's up to at this juncture. Are we seeing any sort of a move over there? Well, it's more or less aping the benchmarks. It's just down by 0.2%. Quick break on the show. Do come right back. Welcome back. You're watching Market Fatafat on ET. Now let's continue with our countdown. Stock number 9 that we want to flag off is NMDC. We do know that the entire metal space has been quite active. Today is no exception to that. NMDC is something that's worth flagging off. It's now at 126 rupees. And remember, this is not the only day that we've seen this uptick come by in NMDC. For the last couple of days, there's been a lot of activity in the stock price. Last week, remember, it received the nod for extension of some of its, leases on some of the mines that it owns. It's a 20-year extension that it has received. And of course, this is all coming in the midst of there being the anticipation of a lot of leases expiring for the Odisha mine. So NMDC is in that power position to essentially capture that market. And if steel prices are increasing, then why should iron ore prices be left behind? So when we spoke to JSPL, they as well said about how some of the miners have already started increasing prices from 300 to 400 rupees per ton, roughly is what his buy price is. So NMDC as well, I suppose, should be increasing its prices. It has already made its pricing decision for the month of December, and I suppose in a couple of weeks it will announce it for January as well. So watch out for that. Nevertheless, 1.5% higher for this mining major. Okay, Vikas, today we're seeing a tremendous amount of pricing action on an Infi beam. Anything that you'd like to spot out here?
Well, no doubt the stock move has been pretty sharp over the last few days and few weeks. We have seen a significant amount of move from the lower badge of the channel of around 33.5 to 43, and then again back to 53 levels. If you look at the more longer term picture, the stock has been a consistently underperformer, so it's better to avoid as after the sharp move.
Okay, 15% higher and just about staying at that level of 54 odd rupees. That's an Infi beam for you. Okay, Varun, why are you flagging off Force Motors today in trade?
So we're flagging it off. Obviously, it's up 13% in trade. It was just a couple minutes ago. Now, basically, we're talking about a company that has maintained its revenue and profitability to a fair extent in a time where autos have been severely under pressure. So the Force stock price has halved over the last year. The 52-week high is around 1,870 and the low is 950. So it's currently trading just about 1,100 bucks after this move. So it's pretty much at the low point. Now, if you look at the metrics, sales-wise, there hasn't been that much of a dip. There's been less than a 10% dip in sales, around 7-8% on a TTM basis. Now, even if you look at the operating margins, they've compressed just 1% on a TTM basis, coming in at around 7% versus an 8% historical average if you look at the last 4 years. And even on a PAT level, they're still almost doing 100 crore PAT. So you're getting this stock at around 13 times. If you look at it on an EBITDA basis, 230 crore EBITDA, you're looking at it at around 6-7 times, which I think is pretty cheap for a brand like Force. Also, and that's what brokerages are saying as well. And also, you know, given that the rural push will now start coming with the budget that's going to be upcoming in February, we know Force is a very rural-focused company. A lot of these jeeps and trucks and, you know, larger carrier vehicles are still for passenger format tend to do better in the rural segment. So, you know, the budget every year triggers off a lot of rural distress, and you know, there's a farm loan waiver which has also been announced, so farmers are going to have some surplus funds. So it looks like the quarterly output for Force over H2 should be better. At least that's what analysts and brokerages from the auto sector are saying. So that's broadly the reasons why we're flagging it off today.
Yeah, well, there are certain budget-sensitive stocks that I usually do see a lot of momentum and movement in and around the days of the budget. Force perhaps as well could be one of them. And Vivek, of course, last week we did see quite a downtick in Dishman, this week as well for that matter. But yeah, what are we observing today?
Well, Dishman Pharma was in focus, over a 40% downtick in the last 4 to 5 trading sessions on the back of the fact that the street was really spooked on the back of income tax rate that came in as far as the company was concerned. Also, what ET now did is we reached out to the management, and day firstly the management came and clarified that they have completely cooperated with everything that the IT has asked for, and in fact they've also updated the exchange saying that the income tax inspection is now over. Also, we understand that today the management is actually calling for an analyst analyst conference call, and it'll be interesting to see what they have to say. Now, this particular stock, given that it's corrected so much today, it's seen quite a bit of a sharp rebound, almost 10% higher. So it'll be interesting to see whether there's any value and what is the outcome of the income tax rate is something that we all need to watch out for.
9.9% higher, quite a rebound seen in Dishman. Now, Emami is something that as well we'd like to talk about today because it's another day of gain seen. But mind you, it's ebbed off quite a bit from the day's high. FMCG in general as a pack is trading pretty smartly. Tata Global, Jubilant, Marico and Emami as well joins this pack. Now, we did have a report that said day before yesterday that the group is looking to pay its entire debt to zero by March 2020. Remember, the debt for the group as a whole, not just necessarily related to the listed FMCG company, and of course the concomitant promoter pledge that had to be done, is something that's been a big overhang for the entire group. However, we do know that buzz is rife with respect to Ultratech Cement emerging as the front runner to take over its cement business, which is at a valuation of 6 to 7,000 crore rupees. And not just that, the promoter has already repaid more than 2,800 crore rupees since April from resources raised through selling a part of their holdings in Imami Limited. So it looks like their aim to become debt-free in 2020 may just be realized. 0.6% higher for an Imami. Okay, and Vikas, speaking on FMCG, what do you make of Marico and the move seen over here? And if there's any other FMCG stock that you'd like to flag off?
Well, if you look at Marico, the stock has been a consistent underperformer. It has seen a good amount of correction from the highs of around 400 levels. But the silver lining is that the stock has been holding those 325, 330 on the long-term charts. So we believe the stock has seen some amount of rebound from lower levels and further up move should be possible. We believe the stock can see further up move of 350, 355 levels over the next few weeks.
39 for Marico, 1.7% of gains. And Varun, what's Kotak's view on the banking sector?
So Kotak's come out with a note which is pretty interesting, talking about the banking sector as a whole. Now the key takeaways are that the recoveries process is taking longer than anticipated, and physical recoveries as well. They're seeing progress, which is enabling them to retain a positive view on the sector, but they're also cautious. The resolution in power sector is giving more hopes. We do know power has a large, format of NPAs for banking and has seen, minimal resolution. So they're very hopeful of an uptick in power resolutions going forward. They also remain positive on banks which have a high share of NPLs. So they're flagging off corporate NPLs specifically. Those banks will do better. And then the valuations are still comfortable on most of the banks according to Kotak. They don't believe that the sector is overvalued, although within the markets it tends to be the most richly valued sector. And finally, in terms of a top pick that they like SBI. They believe it's best positioned to capitalize on the prospects that lay ahead. Huge value unlocking triggers there, as well as recoveries from ESAR, as well as a big digital push that SBI is currently going through. So those are broadly the reasons, and we're just flagging off the entire banking sector today on that Kotak note.
Okay, so that's that's banking in general, and at this point of time today, the Nifty Bank is not exactly doing very well. Most of them are in the red. But it's not just the banking space that's on the brokerage's radar. We also have Thermax. And Vivek, what's Ambit's view on this cap goods major?
Well, so very interesting note on Thermax by Ambit Capital. What they're saying is that not all is done and the dumps as far as the entire capital goods sector is concerned. Also, they're talking about the shift of how Thermax is not just a domestic play anymore, but also the kind of export play that this particular company enjoys. On the back of that, they believe that this particular dip is a very good opportunity to buy Thermax, and they've kept the target price quite high at 1,211 rupees a share. Very interesting note. It'll be interesting to see how Thermax performs going forward, especially given the kind of export order book that the company is now enjoying.
Okay, well, with that, we are out of time. So, Vivek, Varun, as well as Vikas, thank you so much for joining us on Market Fatafat. Excuse me. Now, it's that time of the year when the Christmas spirit is on in full swing. It's the best time of the year, but we want to make it the best time of the year for your wallet and your money as well. So, let's take some help from personal finance expert Harsh Rungta that'll help you cut down on your expenses and grow your money tree.
Best tip is open a separate bank account for expenses and incur all the expenditure by either using a debit card on that expense account or withdrawing cash and then spending it, whichever suits you. But the key is that at some point, if you have not budgeted if you have not budgeted it correctly, or if you have under budgeted the amount that you spend, then obviously your debit card swipe will find no money in the account and it will be turned down. And that's a great mental trigger for you to know that, oh, I didn't budget correctly. Credit cards are a complete must. but use it only for two things. Use it for reimbursable business expenditure, okay, which you will get reimbursement from office. Also, that will force you to submit your expense account bills to the office quickly, so that you get it before your credit cycle is up, okay, or emergencies. What people really do is that they just start investing. So even if you have gone through this and you are investing 30% of your income religiously every month,